When the stock market is in a period of extreme fear, I look to add to my highest conviction stocks. High on my list are stocks that are high growth, yet at value prices. With the US S&P 500 having an average PE of 27 and total world minus the US ETF, VEU, having an average PE of 17, it goes to show that international is a better value. So, my two highest conviction stocks this month both operate in South America. This region of 430 million people is bigger than the United States plus Canada, and its emerging middle class puts digital adoption in the early innings of a multi-decade runway. First up is Mercado Libre. Mercado Libre operates in 18 countries throughout Latin America, with Brazil, Argentina, and Mexico making up majority of their revenue. Their objective is to democratize both commerce and financial services in Latin America, of which currently their revenue is pretty split at 56% for their commerce and 44% for financial services. Their fintech segment, though, Mercado Pago, is what is growing faster at nearly 50% year over year. This high growth, though, isn't new to Mercado Libre either, as they are the only company in the world out of 83,000 to achieve over 22 consecutive quarters of 30+% revenue growth, a streak now at 27 quarters. Some people just say Mercado Libre is the Amazon marketplace of Latin America, but I feel this undersells their dominance. They are the number one e-commerce platform in 6 distinct countries and have built their own logistics and delivery networks in which 2.2 billion items a year can ship through, with 74% of items delivered within 2 days. This is incredible, as South America as a region is a region in which roads and infrastructure are still developing, so this continued investment in Mercado Libre's delivery network just strengthens their moat. Like Amazon, the main growth in profits for commerce will come from leveraging their targeted advertisement to an audience of over 100 million buyers, of which they will generate $1.3 billion in revenue this year as a number 3 digital ad market share. Pretty good for an ancillary business to their marketplace. This commerce segment will have plenty of room to grow in the decades ahead, as despite their high growth, only 16% of retail is being done online in Latin America, less than half that of China and the United States. Commerce may be why Mercado Libre was founded 25 years ago, but Mercado Pago, their financial services segment, is what is expected to really accelerate their growth in the years ahead. Today, they have roughly 72 million monthly active users and are number one in all countries they operate in, minus Brazil, in which New Holdings holds the top position. What differentiates Mercado Pago is their integration with the commerce side, giving them targeted data to make even better informed credit decisions. Today, their credit portfolio makes up 20% of their revenue, in which they've extended $11 billion in credit to 37 million users. Anybody can give out loans, but Mercado Pago is able to do so profitably with over 21% net interest margin minus losses last quarter. Sofi in the United States only has a 6% rate, so this is much better. Mercado Pago also supports businesses as a payment processor, which just widens their moat as a critical piece of Latin America's digital infrastructure. They processed roughly $174 billion of total payment volume last 12 months, which grew 32% year over year. This volume is about the same as Shift4's entire total payment volume, and most impressively, continues to grow when Fiserv's Clover segment cited struggles in their most recent quarter in South America. Despite an average stock return of 30% annually since its 2007 IPO, I believe the best is yet to come in the decades ahead. Our 2030 valuation model assumes that revenue continues to grow at 30% annually the next 5 years, just as it's had the previous 5 years. So, this will grow from $27 billion today to a $100 billion run rate in 2030. Today, their free cash flow margin is around 10%, but I believe this can double to 20% as they gain higher operating leverage in commerce and higher growth in their high profit margin ads and credits division. Today, their price to free cash flow ratio is only at 12, versus historically it's been between 15 to 20. If they are able to expand their margins from 10% to 20%, I believe this price to free cash flow ratio will be at least a 17. It's still a pretty fair value for a business that's grown its top line by 30% annually with 20% free cash flow margins. Put all this together gives Mercado Libre a $340 billion market cap by the end of 2030, a roughly 27% annualized return from today's stock price. I'd be happy with this. Hence, why it is a 20% position in my personal portfolio and an anchor stock for mine and John's community portfolio. Now, before we cover our second highest conviction stock for this month, please read the disclaimer in the notes below. We are not financial advisors, and anything we say should not be considered financial advice. Also, if you like content like this, please help us out and click a like and subscribe as we aim to cover the most innovative companies twice per week. Now let's cover our second highest conviction stock this month, New Holdings. I typically do not like to buy stocks when they are trading near their all-time high, but Nubank is different as I believe they are still undervalued. Not only is their PEG ratio less than the standard 1, but they are roughly half the PEG ratio of fintech favorite Sofi. Crazy stat about New is that they are now up to 127 million members across Brazil, Mexico, and Colombia, having added 17 million new members in the past year. SoFi only has roughly 12 million members, so Nubank added more than a SoFi to its customer account in just the past 3 quarters. This scale is just one part of the Nubank model that will allow them to generate net income on an unseen rate for a bank. We've covered their fast-growing user count. Pretty crazy to think they are the largest digital bank in the Western world and only operate in 3 countries. Besides growing user counts, they are able to generate more and more revenue from their current customers year over year. This is the second variable, which is increase in revenue per active customer. From New's Q3 update a couple weeks ago, they confirmed this continues to increase and is now at $13, versus just 4 years ago was just at $5. This makes sense, as core to New's growth strategy is their land and expand model. They get customers to sign up by offering a no-fee, easy-to-sign-up credit card and perhaps a no-fee deposit account. Most of the customers that they have are ones that legacy banks rejected as are currently not wealthy enough. As these individuals become more wealthy and look to expand their financial needs, Nubank can offer them credit products, investment services, and insurance products, among many others. As these individuals can spend more as well, New's credit card fees from the merchant will increase as well as transactions will be increasing. These all will help Nubank close the gap in average revenue per customer with that of the legacy banks that only target the wealthy. The key reason, though, that they've thrived despite a much lower revenue per customer is their digital stack is so much cheaper to serve customers at consistently less than $1 per month, more than 85% cheaper than that of legacy banks. Making $13 per customer when only costing $1 is pretty incredible. Hence, why Nubank's return on equity is already best in class at 31%, better than Berkshire Hathaway's 10% and Brazilian legacy bank giant Itaú's 20%. I do believe this is just the beginning of a multi-decade growth for New into becoming a global bank for the underserved. For a 2030 valuation, I believe that New can continue to grow their revenue at 30% annually from the roughly $13 billion run rate today. They will be able to continue attracting new members from Mexico at an accelerated rate as they just have 14% of the adult population versus 61% of Brazil's. The United States expansion should be in full swing by 2030, so growth will come from the Latin American diaspora in the United States. I do believe New will enter Argentina, Chile, or Uruguay by 2030 as well. Main takeaway is I do not believe revenue will struggle to grow between attracting new members and increasing their average revenue per active customer. From a net margin perspective, I believe they will expand this from 20% to 25%. Despite the massive revenue growth, they should only need a marginal increase in operating expenses, which will lead to margin expansion. For a PE ratio, I do believe New can command a PE ratio of 24, which is lower than the 31 today. This does mean their PEG ratio is just around 0.8. A slight discount will always exist in Nubank's valuation to hedge against geopolitical and inflation risks in South America. However, their return on equity is just so good and their growth rates are so fast that I believe they should be valued like American Express, which also trades at a 30+% return on equity above the general 15% average for banks. American Express trades at 24 PE, so Nubank should also trade around this. Putting all this together gives New Holdings a $288 billion market cap by the end of 2030, a 24% annual stock return from today's price. What do you think? Do you like Mercado Libre New Holdings at the prices today with a target 5 years out? Please let us know in the comments below and help us out with a like and subscribe to follow our journey as we aim to analyze the most innovative companies twice per week. Until next time, happy investing.